Picture this. You're 65 years old. You wake up on a Tuesday morning, make coffee, and open your bank app. The rent is due. Not a mortgage, not an investment. Rent. Same as it was when you were 28. Except now you're on a fixed pension. Your landlord just raised the rent for the fourth time in 6 years, and you have exactly zero equity, zero, to show for 37 years of monthly payments totaling, by the way, somewhere north of $400,000. I know that sounds extreme. I know you're probably thinking, that won't be me. But here's what nobody tells you when you're in your 30s, happily renting, telling yourself you'll buy when the time is right. The time never feels right. And every year it doesn't feel right. The math gets worse. Today I want to show you exactly what lifelong renting actually looks like. Not the Instagram version, not the renting gives you freedom version. The real numbers, the real life, the real trade-off. And then I want to give you a framework to decide what the right move is for you. Because buying isn't always the answer either. Let's get into it. Quick housekeeping. This video isn't about shaming renters. I'm not here to tell you renting is stupid. Renting is a completely legitimate financial choice in certain situations for certain periods of time. What I am here to do is strip away the myths, the cope, and the renting builds someone else's equity, not yours, cliché talking points, and replace them with actual numbers and an honest look at what the data says happens to people who rent long-term without a plan. We're going to cover 3 things. First, the real cost of renting over time, the number most people never actually calculate. Second, the renting is flexible and investing is better argument, and whether it holds up under scrutiny. Third, a decision framework, the 3 questions you need to answer honestly before deciding which path makes sense for you. Stay until the end. The framework is the most valuable part. And I promise, it's not what you're expecting. Let's start with something simple. Open your banking app right now and find what you paid in rent last month. Got it? Now multiply that by 12. That's what you paid this year just to have a roof over your head. Now I want you to do one more thing. Multiply that number by 30. That's a conservative estimate, conservative, of what you'll pay in rent if you keep renting from now until 65. And I haven't even accounted for rent increases yet. Let me give you a real example. Sarah is 32. She lives in a mid-sized city and pays $1,800 a month in rent. That's $21,600 a year. Over 33 years, until she's 65, at just a 3% annual rent increase, which is actually below the historical average, Sarah will pay a total of $1.07 million in rent. Over $1 million. Not to own anything, not to build any wealth, just to maintain the right to continue living somewhere. Now, a lot of people hear this and immediately say, but I'd be investing the difference. And that's a real argument. We're going to get to it, I promise. But first, let's talk about the second number nobody thinks about. What you don't have when you retire. When you own a home and pay off your mortgage, you reach a point where your biggest monthly expense, housing, drops to near zero. Property taxes and maintenance, sure, but no rent, no mortgage. A paid-off home is an income-generating asset. It generates income by eliminating your biggest expense. A renter at 65 still has that expense, and it grows every year. Now let's look at the just invest the difference argument and why the math is less clean than it looks. Okay, let me steelman the renting argument. The case goes like this. Instead of putting $80,000 into a down payment and paying a mortgage at, say, $2,400 a month instead of your $1,800 rent, take that $80,000, invest it in an index fund, and invest the $600 monthly difference too. Over 30 years, at a 7% average return, that $80,000 initial investment alone becomes $609,000. That's a real number. That's real wealth. And in theory, if you're disciplined enough to actually invest every single month without fail, In some markets, in some situations, the math can work out in the renter's favor. But here's what that argument assumes. First, that you actually do it. Research on actual human behavior shows most people don't. The money gets spent, life happens, the market dips and they panic sell. Or they never start because the account setup feels complicated. Second, that rent doesn't keep rising faster than returns. In many major cities over the past decade, rents have risen 40%, 50%, 60%. Your monthly investment contribution keeps shrinking as rent eats more of your income. Third, that you have the psychological resilience to watch your net worth drop 30% in a market crash and not touch it, while also paying rent that doesn't stop and keeping your job and not having a single unexpected life expense. The invest the difference argument is mathematically sound. Behaviorally, for most people, it's fiction. Now here's where I want to be honest with you, because this is the part most "you should buy a house" videos skip. There are situations where renting is the smarter move. If you live in a city where the price-to-rent ratio is above 25, meaning buying would cost more than 25 times the annual rent for a comparable property, the numbers often favor renting and investing. San Francisco, New York, London, Sydney. In those markets, buying can genuinely be the worst financial choice. But here's the thing. Most people who are happy renting in those cities are not investing the difference. They're just paying rent and feeling okay about it, because they've heard the renting argument enough times that it feels true. The question isn't renting versus buying. The question is, do you have a plan? And most people, if they're honest, don't. Let me show you what that actually looks like over time. I want to take you on a timeline. Age 30, you're renting. It makes sense. You're not sure where you want to live. Maybe you'll move cities for work. Flexibility has real value right now. This is the rational choice. Age 35, you're still renting. You looked at buying 2 years ago, but prices are high and you want to wait for the market to cool. You've heard there might be a correction. Better to wait. Age 38, the market didn't cool. It went up another 18%. Your rent has increased twice. You now need to save an extra $30,000 for a down payment to afford the same house you almost bought 3 years ago. You're still waiting. Age 42. A close friend buys a house. You go to the housewarming. You feel vaguely unsettled, but tell yourself the mortgage stress isn't worth it. You've started thinking more seriously about investing, but the market feels volatile and you haven't opened the account yet. Age 47. You do the math for the first time. Actually sit down and calculate what you've spent on rent since you were 30. It's $340,000. You feel sick. You call a mortgage broker. The numbers are hard now. Prices have risen significantly and your income hasn't kept pace. You'd be 72 before the mortgage is paid off. Age 52. You've accepted that you probably won't buy. You move to a slightly cheaper area, find a better deal on rent. It feels okay. You've adjusted. Age 60. Your landlord sells. You have 90 days to find somewhere new, in the current market, at 60, with your income. You find something, but it's $400 more per month. Age 65. Retirement. Fixed income. Rent still due on the 1st. This isn't a horror story. This is just what happens without a plan. And the tragic part is, none of those individual decisions felt wrong in the moment. The 30-year-old renting makes sense. The 35-year-old waiting makes sense. The 38-year-old frustrated by prices makes sense. It's the accumulation of sensible, short-term decisions that produces an outcome nobody wanted. Okay, here's what I promised you at the start, the framework. And I told you it might not be what you're expecting. Most should I buy a house frameworks are financial. They ask you about your income, your savings, the price-to-rent ratio, the mortgage rate. Those matter, but they're not the 3 questions. The 3 questions I want you to answer, honestly, not optimistically, are these. Question 1. Do you have a plan or do you have a feeling? Most renters have a feeling. I'll buy when the time is right. Renting makes sense for me right now. The market will come down. A plan sounds different. I'll rent for exactly 2 more years while I build a $60,000 down payment by saving $2,500 a month, and then I'll buy in this specific area with a budget of this specific number. If you can't say the second sentence, you have a feeling, not a plan. Feelings don't compound. Plans do. Question 2. Are you building an alternative? If you're renting and genuinely investing the difference in a disciplined, consistent way, great. You may be building real wealth on a different track, but be honest with yourself. Not, I'm planning to. Not, I have a Vanguard account I check sometimes. Are you building something, month after month, without fail? Because if the answer is no, then you're not renting because it's financially optimal. You're just renting. And time is the one resource you cannot buy more of. Question 3. What does your housing situation look like at 65 in each scenario? Actually sit down and draw this out. Get specific. Scenario A. You keep renting. What does month 1 of retirement look like? What are you paying? What do you own? Scenario B. You buy in the next 3 years. What does the mortgage look like? When is it paid off? What does month 1 of retirement look like then? Scenario C. You invest aggressively and rent indefinitely. Be honest about the numbers and about your actual track record with investment discipline. The goal isn't to convince you to buy. The goal is to get you out of the vague, comfortable fog of "I'll figure it out" and into the clarity of an actual decision. Because here's the real thing. Renting is not the problem. Drifting is the problem. Every year you spend drifting is a year of compounding you'll never get back. In real estate, in the market, in time. The people who end up paying rent at 65 didn't make one big wrong decision. They made 30 years of small, non-decisions. Don't be that person. So to recap, the real cost of long-term renting isn't just the money. It's the combination of money spent, equity not built, and options narrowed over time. The invest the difference argument is valid in theory, but most people don't actually do it with the discipline it requires. And the decision to rent or buy isn't primarily a financial one. It's a planning one. 3 questions. Write them down. Answer them honestly. Do you have a plan or a feeling? Are you building something? And what does 65 actually look like for you? If this video made you think, hit the like button. It genuinely helps more people find this content who need to hear it. And if you want to go deeper, I've got a full video on the exact saving strategy to build a down payment in 24 months, even on an average salary. It's linked in the description. See you in the next one.